All right, Marathon Digital. Let's see what they got to say over here on Bloomberg Television, guys. That like button. Appreciate you for hanging out. Let's do it.
It's worthwhile to start with the prices here of Bitcoin and how you think it might be impact into the halving. A lot of questions out there of whether a lot of those rises have already been baked in.
Incorrection. 0.0025 Bitcoin is, I guess, $163. Thank you, the one who was. Appreciate you.
I think the ETF's approval, which has been a huge success, has attracted capital into the market and essentially brought forward what could have been the price appreciation we typically would have seen 3 to 6 months post-halving. So I think we're seeing part of that now already. These ETFs, 11 were approved. 4 of the 11 ETFs are the most successful ETF launches on record ever. And the total amount of capital in the ETFs already has surpassed 50% of the amount of assets under management in gold ETFs. So what has happened in 3 or 4 months compared to 20 years with gold is pretty astounding. And so we think that has pulled forward some of the demand. The halving event will reduce the supply of Bitcoin by about 450 a day, the new emissions of Bitcoin, which will have some small impact on price most probably. But as miners, we're very excited to go into a halving where, for once, price has not declined prior to the halving, but rather price has gone up. So everybody's obviously maximizing and optimizing to that.
Right, Fred.
So I'm worried about the buy the rumor, sell the news event, right? But at the same time, the demand from these ETFs brought in so many people wanting to buy Bitcoin. How much do you guys think it's actually going to pull back if it is a buy the rumor, sell the news event? I don't think it's going to be a giant pullback like a lot of people are expecting.
I want to talk about exactly what you're doing to optimize ahead of that halving. Over at Marathon, you guys, on average, mine about 28.7 Bitcoin each day. What are you doing to decrease the cost, since it's going to cost you more to mine these Bitcoin? What are you doing to save money and ease your margins?
Great question. So we built the business and scaled very quickly using an asset-light model, where we essentially relied on third parties to build the infrastructure, the hosting, the data centers, if you would. Then we would come in, plug in our miners. So 100% of our CapEx was invested in miners. That allowed us to scale to become the largest miner, publicly traded miner, arguably in the world. Then in December, we went and started looking at those hosting relationships, and we started moving to consolidate them. And we now have gone from owning less than 3% of our facilities to owning over 53% of our facilities in just a few short months. The benefit there is it allows us to essentially take out the middleman, take out the margin that we were paying a third party to build infrastructure and manage it. And we were able to do that at a cost less than the replacement cost for those assets. So a net great gain for our shareholders in that regard. We'll continue to do that as we move forward, as well as continue to expand through owned and operated facilities, both in the US and abroad.
Average daily Bitcoin produced, you have at 28.7 as of the end of February. When you think about the halving, how is it going to change your economics and what you see in terms of Bitcoin rewards, you think?
Bitcoin, real quick, is actually down to 67,000 right now. Or it's at 68 over here, according to CoinGecko, but I just bought some on Coinbase, actually.
So essentially, if you look at the number 28 on average per day, that would turn to be 14 roughly per day. We'll have to see the impact, if any, on the global hash rate, remembering that Bitcoin mining is a zero-sum game. Today, there are 900 Bitcoin made a day or emitted a day. Post-halving, it'll be 450, and all the people mining are vying for that. So all our compute is competing for that. So the key is to be one of the most energy efficient miners. Marathon's fleet is amongst the most energy efficient in the industry. Those miners that have less efficient machines may have to shut off, but the high price of Bitcoin right now essentially has made it profitable for even marginal miners to mine post-halving. What we'll have to see is really what happens to the dynamic. If the price of Bitcoin were to drop $10,000, $20,000 per Bitcoin, that could potentially push some of the more marginal miners over the edge, and they would have to stop mining, and they could become acquisition targets potentially. You also have a fairly large number of rigs, the computers, if you would, that miners use, that are not very energy efficient, that will be marginalized by this halving. So it'll be very interesting to see what happens, but we're very focused on both organic and inorganic growth. And we believe that the industry globally is going to continue to grow and add hash rate to continue to mine and secure the Bitcoin blockchain.
Fred, on average,
So I know a lot of you guys are actually, mining at home. So if you guys know, like, Bitcoin miners, SHA-256 miners, I mentioned this in my last video as well. Right now, Digibyte is actually most profitable over here. Just looking at this, actually, let's go to whatever, S19 XP real quick. So you guys can see, you guys can mine these coins right here, right? Digibyte, Bitcoin, Bitcoin Cash, HTR, whatever that is. But, well, actually, what the hell? These are 0. Weird. Anyways, BCH, right? That's probably a good alternative if you're at home and you need to figure out something to mine if Digibyte doesn't hold up for some reason after the halving. But, I mean, yeah, it sucks to the Bitcoin network, machines coming off it, but at the same time, it'll come back and the price appreciates. But if you're an at-home miner, you guys still have options to mine other coins and swap it into Bitcoin. So don't forget about that.
how much does it cost you to mine a Bitcoin, and like what's the cost of extraction? And then I'm wondering also about potentially moving more outside of the U.S., perhaps to find cheaper energy.
Sure. So our average cost to mine Bitcoin across all the facilities is in the low $20,000 range today. And by that, we include the energy cost as well as the operating overhead, meaning the people on the ground that run the facilities, any cost to run the facilities, et cetera. So it's the marginal cost to mine a Bitcoin, if you would. That will now go to about $46,000 on average. Obviously, the people cost doesn't increase. It's just the amount of effort, the amount of energy that the miners have to do, that will double. So domestically, we're still going to be in a great position. We operate today on 3 continents: North America, the Gulf region in Africa, as well as Latin America and Paraguay. We're going to continue to grow our business internationally. One of our goals is to have 50% of our revenues from outside of the US by 2028, which is the next halving in line after the one we're going to have here in a couple of weeks. The other thing we're doing, we're very focused on a vertically integrated technology stack. So everything from our pool software, which is the orchestration layer that kind of controls what our miners do, all the way down to the firmware in the miners, and also investments in ASIC technology through a company called Auradine, which is the only US ASIC manufacturer in the space, located in Silicon Valley, and then also immersion or cooling technology. And we just released some very interesting immersion technology at the Empower conference in Houston a few weeks ago. And so we think that even the AI industry will have interest in that. So diversifying revenue streams, optimizing existing operations, and continue to expand.
Fred, quickly here, how do you feel about the future when it comes to your industry? You kind of alluded to this idea that players could be washed out when we think about the dynamics and the pressure that it puts on the Bitcoin halving rewards being less this cycle and, of course, in future cycles. How are you preparing for that potential washout? You mentioned acquisitions. What do you do today to prepare for that opportunity? And how big do you think the opportunity will be?
Yeah, great question. So we are believers that Bitcoin miners have to try to strive to get to zero cost energy. And what do I mean by that? It means that basically the only way we'll survive long term is that our cost of energy is offset by something else. So we have started an initiative that we call energy harvesting. This is where we are going to landfills and using stranded methane gas from landfills. It could be oil fields. It could be biomass from beer brewing, ethanol manufacturing, methanol manufacturing, where you take that biomass, convert it into energy, and then feed back into whatever that industrial process was, heat. Industry pays about 50% of the energy cost for industry is spent on heating things. And so Bitcoin miners are great at generating heat when they mine Bitcoin. About 95% of the energy that goes into a chip that mines Bitcoin comes out as heat. So we believe that Bitcoin miners will be able to essentially take stranded energy in the form of methane, biomass, what have you, generate electricity, generate heat, sell the heat back into an industrial process. All of that subsidizes the cost to mine Bitcoin because Bitcoin is simply how we generate the heat that we sell back. And I think longer term, Bitcoin mining will move from being these large data center sites with hundreds of megawatts to being hundreds of thousands of much smaller sites that are doing everything from heating buildings in Finland to mining, to heating greenhouses, heating shrimp farms.
We've seen that. We've seen the mining in greenhouses to keep it warm.
Industrial processes, ethanol plants, processing corn waste, cow manure at dairies, et cetera. That's the future for Bitcoin mining long term.
That's crazy. You know what we need? We need Elon Musk to put Bitcoin machines or mining machines inside the Teslas. So when you burn the electricity, you can earn some coin as you drive. That'd be amazing.